January the 14th, 2009, the market is getting hammered today, and we are trying to find support at 8,150 on the Dow, but the market has been down over 3%. It started down and it has kept going down. How much lower we are going to get, time will only tell, but we have broken some major levels of support today. We had a level from December the 12th, which was 8,351. That was broke at the start of the day. The next level, which was a December 22 low, that was 8,272. And that was broken right around 9:45, it looks like. So that was pretty much broken at the start of the day also. So we got what next? What are the next levels of support? The next one is a huge one. It is the massive one. And if it breaks 8,000, watch out, people. Seriously watch out if it breaks 8,000. I should be saying no, not if, when it breaks 8,000. And it might not break 8,000 this month, and it might break it in 2 hours or even 40 minutes from now. But when it breaks 8,000, watch out. And here's why. Over the last month, ever since the November bottom, the market rallied back up. When it rallied back up, it was able to find support between 8,000 and 9,000. That was a major level at that 8,000 level. It was also the area of support, 8,000, from the October 10 crash, because it bottomed at about 7,880-ish or so, which is only a little over 100 points. So that acts as an area of support there. The previous area of support acted again as support. If this area acts as resistance, watch out. But nonetheless, let's talk about 8,400 right now. That was a key level yesterday as support. That's going to act as resistance at some point, and if it fails, that's another reason to say that possibly the market has got a long ways of selling left in the market. They also said on CNBC today at the start of the day that the majority of the volume, Bob Pisani said something like 90% of the volume was on the downside, and then someone else come up with some numbers and said it was like 98% of the volume was on the downside, and this was at about 10:30 in the morning. So obviously since 10:30 the market has been in a trading range of 8,150 and 2,000. So what's happened since then seems like we're having some buyers, but not many, because there's dead cat bounces on, it seems, every fall. We had a dead cat bounce after the July 15th lows, a dead cat bounce after the October 10th lows, a dead cat bounce after the November 21st lows. And what's going to happen is these vultures, or these people that are thinking that they get a good deal for the long term, which quite frankly is false. If you're looking to go long term, as far as long term investing, my best suggestion is wait for about 2 or 3 years, wait for the Dow to finally bottom at around 2,000, and then at that point there, you might not get the exact bottom, but that would probably be the best way. But nonetheless, what is happening is these people are buying and expecting to get value over the long term. They're thinking, heck, the Dow Jones is 14,000, 13,000. If I can buy now at 9,000 or 8,000, 10,000, I'm getting a great deal. Yet they bought the Dow Jones on July 15th at 10,800. And how good does it feel right now? If they bought Citigroup or XLF at that time, they've lost a lot of money. So these people that bought the deals before didn't sell the profit they had, because it was a very good time to buy short term, but it was a terrible time to buy long term. So those people who bought long term on those dips down, they might not have any money left. And even if they do have money left, they may not want to do it again, because they're finally thinking, man, I'm probably just going to lose again. And if they think that strategy in the sense of long term, they're finally making a good decision. But nonetheless, if there's less people doing that, that means it's going to be tougher for these dead cat bounces to have and more selling pressure on the market. And if that's the case, that can cause possible daily stock market crashes. The other people, or another group of people who buy on these low dips, are the day traders or swing traders, but that doesn't make much of a difference anyway, because they will be buying, for example, the last November 21 low, they buy a Dow at like 7,600 to 8,000, and they've had many opportunities to sell between 8,500 and 9,000, and they've already sold it already. In fact, they've bought and sold so many times along the way that they're not going to help the market go up. If anything, they might tinily help it go down. I'm not too sure about that. My guess would be that they make it break even because their internet's so fast. That's my guess on that, but nonetheless, be careful for possible market collapses. For the rest of the day, 8,250 is going to be a key level of resistance, and then after that, 8,400 is going to be a key level of resistance on the Dow. 8,250 acted as support at about 945, and 8,400 was a key level of, let's see here, it was a key level of support at the end of Tuesday, January the 13th. So we'll see how this reacts. Now, if it cannot get above 8,400, once again, that could be very dangerous for the market. This could mean even more selling that is going to be put upon us. However, it does seem pretty clear now that the 2-month bull run that happened from November up in the middle of November, like the 21st, until like around January the 6th is now over. It is completely over. We are now going to be making a pattern of lower highs and lower lows, it seems. So for the short-term traders, obviously, maybe you might want to short at the end of the day, but nonetheless, at some point there should be a rally, and then you might, if you're going to get in on the rally, get in really quick, take your profits whenever you get them and get out, and then either get on the sidelines or then go back to shorting the market, because the low of November of 7,400 is most likely going to be tested very soon. So it seems with the loss like this and that the key levels of support that were broken, that it's just going to be tested. The fact that the market is going to go way lower than 7,400, 5,400, 3,000 Dow, to me only seems as if a matter of when, but not a matter of if. I was kind of hoping that the market was going to find a way to use like 6,500 to 7,000 at the lowest point of 2009. And I still do, but that doesn't mean that it's going to, just because I want it to happen. The market is going to do what the market is going to do. Just because I want something or you want something doesn't mean that it is necessarily going to happen that way. So what I want to do is, just before I leave, top 10 losing days of the all-time, well, not all-time, but the top 10 losing Dow days since like 1928. I want to show the top 10 and technical analysis for the reasons of why it was going down. And maybe, just maybe, it's a possibility that today will be part of the top 10, but 3-4% is definitely not top 10. I think the 10th lowest is already 7%. So it's got to get at least 7% to break that. But nonetheless, I'm going to be showing that in a video series, hopefully starting next week. Thank you for watching. Peace out, everybody, and have yourself a magnificent day. Bye-bye.